Good evening traders, and welcome back to our latest analysis. It's been a couple of weeks now. We've taken a bit of time out during summer months, and as we're pushing on through August, we're easing ourselves back into the markets. It's been a relatively successful last week or so, but we are trading at reduced risk. There's not much activity. The trades that we have taken have been pretty spot on. We've had a couple of losses obviously here and there, but what we're looking for is a continuation of dollar strength primarily. But we've got a couple of scenarios that need to happen. We are looking for USD DX to push on towards sort of like 109s and potentially maybe even 110s, 110.50, depending on how this next impulse occurs. It is usually a period of time where we are seeing everything else extremely weak at the moment, and regardless of interest rate hikes, etc., we've got to look at why economies are doing it. It's not because the economies are performing well. It's purely an inflationary battle, and this ultimately is effectively going to drive quite a few economies into recession by the looks of it. So it's not a positive outlook. We either deal with a recession or we end up with hyperinflation everywhere. So it's not exactly a battle you'd like to choose, but there's the best of a bad bunch, you could say, is we'll deal with a recession. But the good news for you traders is that in a recession we can trade long, we can trade short. So you've just got to stay in the game. You've not got to over risk. Remember, this isn't financial advice. This is how we look at the market, how we will trade based on what we see, technical analysis. A lot comes down to risk management. A lot comes down to knowing when to cut your losses, and obviously if you can stay in a trade, how you can manage that trade until it hits its peak amount of profit. So what we're looking for here with the US dollar is, first thing we wanted to see was that this descending trend line here in this corrective pattern. As you can see, when price came up into the top trend line here, we've basically been rotating backwards and forwards in this correctional move, and we've yet failed to break this high here at 107. We ran into it yesterday, we rotated back towards the trend line, we've running it into it again today, and so far we've rejected it. So we've got alerts for just above 107, so we can put that in there. If we get above 107, it's ultimately the trade that I'll be looking for will be short euro dollar if we get above 107. So we're going to take a look at euro dollar and opportunities that we saw and how we can potentially look to continue this trade. So if we go back, our analysis that we sent out to our members, because regardless of summer months or not, I'm posting YouTube content, all our community members will receive watch lists on a Sunday and a Wednesday, and we put out, if there's 5 charts that we like, if there's 12 charts that we like across currencies, commodities, indexes, cryptos, you name it. We look at the whole spectrum, we send out a compilation of the charts that we like, and we break it down, and euro is one of those. And if I go back to, if I just go in bar replay mode and we go back to, it was the 7th of August, so it was back here when we sent it. 7th of August was the Monday, I believe. And if we go back to this point, this is what it was looking like, and I put this box in here because if we just zoom out a little bit further, there's actually a long-term trend line that I've deleted for some reason, which basically is this here. So what we can see is we've got the initial rejection when the impulse started, and we've got another rejection. We've got these rejections, market came into here, and basically what we said is that we want to be short euro dollar. Euro fundamentally is absolutely screwed. Technically we are in a significant downtrend, but we are in a corrective pattern at the moment. So I want to be short. So there's 2 places that I'd want to be short. One is if price came up into the intersection here between the corrective channel that's being formed and the long-term descending trend line, or I want to be sure if support breaks here. So I'm looking at short from this one, or if price breaks here and then we get a correction, and then I'm going to look to short like that. So option 1, option 2. So if I just remove those drawings and we fast forward bar by bar, what you'll see is the market pushed. We had the CPI data that took the market right into our sweet spot. We got a lovely 4-hour candle, which is the candle that I sold. I'll show you that if I just drop down to the 4-hour chart. Now, there was the 4-hour candle. It triggered us in. Stops were at 103.70. Now, it kept us in by about 4 or 5 pips because it spiked out. It spiked up on the CPI data. Then we rotated lower straight afterwards. Then the following day, it was like a bull trap trying to catch retail traders that the market is going back to the upside. And you'll see that the candles came very close to taking out the previous high. They didn't do it, but it came close. And then literally once it just rejected that area again, we had a straight move down for a nice 2% trade right into the support trend line. Now, if you're a higher time frame trader, you can look at this current area and say, well, this has been done, but if we look at this on the daily and we go back to the present day, things to look at and how we could potentially trade this would be, right, we've had the confirmation, we've had the evening star formation, we've had the candle follow through. So really, if you're an end of day trader and you look at the bigger swing type moves, ultimately I think you could be looking at selling sort of at 101.48, anywhere in this area, with stops above the highs and targeting, giving yourself a 2-to-1 target and maybe looking for price to head somewhere down here. So that would be something you could look at. If you want to be a little bit more patient, or you'd like things to happen a little bit quicker like myself, I wouldn't be trading that move. What I'm going to be looking for is where price is now giving this kind of corrective pattern. So we've got a nice bear flag in formation. Once we either have 3 touches, which at the resistance, so we could look at something like this, and if I just put this in here, so if we rotate in here, so now we've had 1, 2, if price drops down, comes back for a 3rd attempt, I'll happily look to try and sell somewhere here with stops out of the way, and this will be an aggressive entry and looking for this corrective pattern, rising wedge, to break. And again, this is just looking at where the market's failing to rally significantly and using corrective patterns. As long as I get 3 rejections, I'll look to trade this one in here. Again, it means my stop's going to be a lot smaller and therefore increases the risk to reward. But I will be taking initial targets off somewhere in this region here, because this is where the corrective move started, which means it could come down to here, could fail, and then start to reverse back this way. However, the way I'm seeing the dollar is, I think we're going to see a further push. How that comes and how that originates, I don't know, but that'll be my set of rules that I'm looking at for the euro. If we go over to cable now, cable is in an interesting position. So it's a market I've been wanting to short. There's something that is holding me back a little bit, which we had the rally, came back into previous resistance, we then started to sell off, but then price failed to break or move lower, and then came back up and test the same level 3rd time. So ultimately what I've done is I've put in a counter trend line here and I'm waiting for price to break. Price did break, but then it came down to this wick low here and rejected the same price point. So rather than just jumping into any trade here, I'm going to wait for price to get through this sort of 1.2 area. We get through 1.2 and I'll look for the first rotation higher to get short, and that should give us some nice pips down to at least 1.18. So that's what I'm going to look for. So get your alert set on around 1.2 for cable to break. If we look at gold, so gold has hit our take profit today. We've done a couple of trades. One end of day trade, which we posted on the 10th of August to our members, which was when price, it hadn't tested this high yet. It hadn't gone into here, which was CPI data. We were looking for price to run into here. But what we were looking for was effectively a break of this low and a break of the trend line. So we had this order placed and it took 1, 2, 3, 4, and then Monday, the 5th day, to actually break and trigger us. Our stops were above, we didn't put them right above this high. I think it was 1805, 1806, if I remember rightly, off the top of my head. And price broke down, it moved. Yesterday was a relatively steady day, didn't really do a lot, and then today we pushed and tested 1785 and then rotated back lower down into 1761. Our first take profit for a one-to-one target was 1762. I'm going to show you what we did today in terms of scalping for potential shorts, which came in really quite nice. So it's just a very simple trade. Market came in, we've got a nice bearish engulfing candle off the resistance level, and we basically just took that down, closed our trades out, took one-to-one off it, and then about 4 p.m. before we got too close to FOMC minutes, we closed it all out. The 1783 trade, that's still running. We banked our 1% at TP1, and we now have stop loss at break even. Where do we think this could go? Well, we've got another target sat down at 1756. It didn't quite get there, it wasn't far off. So just around here we've got another target, which you can see where these wick lows are. We're just looking at structure basically, and then if that hits take profit too, fantastic. And then we do have a very small position left. It'll be about 15% of the original trade. If we hit take profit 2, we'll have 15% running to hopefully come down somewhere to near these lows. If price doesn't get down here, it doesn't matter, because we'll be managing the trade as price drops. But while we see bonds continue to drop lower, we expect gold to continue with it. Let's take a look at the Nasdaq. I think I'll leave it there for currencies. I'm going to take a look at the Nasdaq, and then what we'll do is we'll have a shift over, have a look at a couple of cryptos, and then we'll call it a day for today. Okay, so the Nasdaq, we can see it running in a rising wedge. If we just go to the weekly, you'll see, and this is the same with all indexes, they have actually broken and created new highs on the weekly chart. Does this mean that we are now starting a bull trend? Well, I wouldn't call it a bull trend. We can see that the market has broken through the descending trend line as well. Where we could potentially rotate lower to could be 12.7. It could come all the way back down into this area here. I do think we're going to have a lower move on indexes, and that will be, you know, not just a seasonal move. It's something that is looking likely based on what we can see in terms of price action. So if we look at the daily is still printing quite nice higher highs, higher lows. Although the cycles are getting a little bit weaker, price is still rejecting this ascending trend line. If we go down to the 4-hour chart, now this is where it's getting interesting for me, because I like this area 13,550, where price today came off the trend line through the minutes. We got a big spike up into here, and now we're potentially rejecting this area. If we can break the low of today, that would basically give me the signal to look for shorts on indexes. And shorts on indexes, you know, you could look at trading potentially some of the yen pairs if we do see some yen strength follow through as as a safe haven, but it's not looking that way at the moment, to be fair. So I just think if indexes are going to drop, we'll probably just see indexes drop. We're seeing bonds continue to drop. We're seeing 10-year yields continuing to appreciate. So that's going to pull gold down with it, and more than likely if yields are going to continue to push higher, that's going to send the yen lower as well. So there's only one real market to trade, which in my opinion is you're trading dollar, you're trading gold weakness, and you're going to be looking at indexes selling off, and it's where do you think they're going to sell off to. If you're happy to short them, then short them into let's have a look at some potential areas that you could short it into. So I think if we do break below this area, this zone is potentially being taken now, but I'd be watching for price to break the trend line, and then we'll look for the first lower high to pull back down. We've got a nice little bit of structure through here, and also through this area, so around 13,000, around 13.3, we could be looking for opportunities, and we're turning negative on this current 4-hour candle. So the spike up after the minutes has, the entire move has been taken away. So there's actually I think there's a short underneath this swing low here, short with a stop above, and basically manage the trade accordingly. So according to your rules, whatever that may be. So I like Nasdaq for some further downside, and that essentially is going to bring risk currencies, Aussie, CAD, Kiwi lower with it. Aussie's taking the brunt of the music today. It's 1.2% down. We've got Kiwi 1% down and CAD 0.5%. So Aussie's definitely the weaker one of those, and Euro is holding strong at the minute in comparison to everything else. So are we going to see Euro follow tomorrow? Is that going to be the lagging currency, and the others have been leading? So we'll see. Essentially it's dollar strength and trade what meets your rules. Right, let's take a look at, let's go over to the crypto space. So the crypto space has been a little bit interesting. We've obviously had the issues with Tornado Cash. And there's some fantastic reviews out there at the minute talking about the sanction that's being put on, and how the code that has been written is open source code. So the analogy that's being used today is that if they're locking up people for using open source code, then it'd be a bit like saying that drug dealers that use highways to move their goods around, then you have to close the highway. So it doesn't make sense on the way that it's been put about. So it's quite a have a look and see what you think if you're into the crypto space. But what I would say is on the futures side, I've looked at the futures market in my crypto channel, the free crypto channel. Yesterday I highlighted that the market, the movement of what we're seeing here in price, when we look at the way the market moved down and now we're looking at this movement higher, it's a very much of a corrective nature. And by that I mean you're not getting these big impulsive momentum moves. So you're getting a move up and then the move back down is pretty much equal. It's deep corrections, 61.8, over a 50% correction way, and the highs are just barely breaking the previous swing high. So that's very corrective in nature, and what that means is where you're seeing these, oops, let me just do that one, where you're seeing this support trend line here, the probability says we're going to see that break, and when we see that break, that's perfect for looking for short trades. So looking for more crypto shorts. If you see my video a couple of weeks ago, I basically highlighted looking for crypto downside. If we look at the futures contracts as well, we've seen that basically the commercials have been buying Bitcoin, but not massively, as price has moved up. So what they're doing, they're potentially hedging the market at the minute, because they're not buying it in a way to move the market. So the thing to watch out for is when we see the next futures release on Friday night is, are the commercials, are they reducing those long contracts? So if they are, then effectively the way that they were trading this little move here was just purely a hedge on the fact that they see the market pushing up a little bit, and then if they pull those longs, watch the market offload. And I'm seeing that a little bit right now. You know, we want to see how this candle closes, but if it closes significantly bearish, then tomorrow I'll be looking for intraday corrections to get short on this market. What else did I send out yesterday? We look at ETH. So ETH was looking bullish, coming off the trend line, and you'll see that I was highlighting a potential move to the upside. Now, the one thing that when I was highlighting the move to the upside, I did say that the crypto market does look bearish. So something that I wanted, and was looking for, was maybe a move above here and coming up into this space before we rotate lower. Now, obviously the news with Tornado Cash, the sanctions, etc., that's obviously not helped the crypto space. It's been one thing after another, but you do have quite a lot of positive news with Ethereum and the merge, etc., happening mid-September. So I was expecting that we potentially see a little bit of a push up as retail investors get sucked in, only for the news to come out when the merge actually happens and it goes through, to see the market sell off. So that obviously, unless we come back down to 1700, we see a rejection here, then we could look for long opportunities. But the way I see the crypto space at the minute is we're going to see more downside. We've just touched 20 minutes there, guys, so that I know that's about the length that I don't want to go over. I don't want to keep it, I want to keep it short enough that it keeps you watching to the end and you're getting value, but I obviously don't want to keep talking so that send you to sleep. So on that note, guys, I'm going to say good night. If you have enjoyed the content, the analysis, please always give us a thumbs up. Ask us any questions below on maybe analysis that you'd like to see, any sort of markets that we don't cover that you'd probably want covering, or if there's any educational content that you would like releasing, let us know. We're always happy to help. And if you are in the Birmingham area in the UK, any surrounding area, about 30 minutes either around the Birmingham Central, we are hosting a live event on the 27th of August. That's in 10 days time. I'm going to put the link in the comment section below. So if you'd like to attend, it's free to attend. I'm going to give away loads of prizes, going to a full day of education. We've got a guest speaker there as well to help with mind-body transformation, help you basically kick procrastination into touch, give you the energy to wake up in the morning on springs and go and smash your fucking goals. Actually go out there and hit your goals and basically supercharge your day. Now, if there's something that you want to do, make sure you click the link, register. It's free. We'll love to see you there. And that's it for tonight, guys. Bye bye.